Welcome to welcome to Quantum Trading Academy. Today we're gonna talk about trading strategy for consistent wins. Okay, so let's get into it. But don't forget to follow, subscribe, leave a comment if you need to. If you have some questions you want to ask, leave a comment. Be more than welcome to answer your questions. All right, then let's get into it. We're gonna be starting with the presentation today. Okay. Was the ultimate practical trading strategy for consistent wins. So let's get started. The main idea for it is a step-by-step trading strategy that blends in technical analysis, risk management, execution techniques to help traders become more consistent. Let me start off with this video saying that this video is really not this channel is really not for traders for people who trying to learn how to trade. For I would call them not beginner traders. I would say more of a somebody who wants to trade who never had experience. Okay, these is for people who been trading maybe for a while, and been making money, but want to learn how to be more consistent in winning. They haven't been consistent. They haven't perfected their strategy. They haven't figured out their strategy really. Okay, so let's get into it. The next slide. The step one, and we talk about market structure and trend identification. Okay, using a higher time frame like 1 hour, 4 hour to determine the trend. Now, I don't do this much often. A lot of people don't use it much often, which is okay, but it does help to see where's the market is moving to. The reason why I say it does help, I use the 1 hour. Okay, when it comes to seeing where the market trend. The reason why I say this is because you don't know if it's going to hit the the resistant, or it's going to be a double top, or it's doing a head and shoulders, which can mean a reversal from the trend that's already occurring. So a lot of times you do want to check the higher time frame to see if it hit any resistance, any double tops, head and shoulders, because you might be thinking it's going up because it's been going up for a while, but it's going up to hit that resistance. Okay, a lot of professional traders know this, so they play supply and demand, support and resistance. Okay, so you want to understand the higher time frame will help you determine, okay, worst way the market is potentially keyword potentially going throughout the day. Okay, so you don't want to just jump in the market and trade thinking it's one way, which is will go the opposite way. Okay, so as you can see, as I got here, we have the upper trend that's going up, the downward trend that's going down. We also have it sideways, which is ranging. When it's ranging, a lot of people have trouble trading this uh, because it's hitting support and resistance, but people really want to play the breakout move rather than the support and resistance. Okay, but I know there's a lot of people that does play and really good at the range movement. Also, is really good at making consistent money. Okay, because they understand the support and resistance. Okay, so the next one is identifying the key support and resistance. So, like I told you, you never know. Let's say you're looking at the 1 hour right here and it's going up. You don't know if it's hitting a double top and it could reverse down and hit the support. Okay, you never know. But the goal is to right here we're talking about identifying the support and resistance level. So you want to identify, okay, this breakout right here, okay, at this resistance. When it broke past this resistance, it came back down to the resistance, test the resistance, and then bounce off that resistance, turning into support, and it continued to the upside. This is another good example where it bust past the came all the way down past the support, pulled back to the support, testing the support, turning resistance, popped down, came back, double top, double tested it. So that's a good, very good confirmation answer. And boom, on the way down the side because it turned the resistance into support. Same thing here. Very good example. Um, it's ranging right here. That's why I say that a lot of people likes to play the range, but also a lot of people don't know how to play the range, so they can lose a lot of money. People that do know how to play the range typically make the money because they understand support and resistance. But a lot of people are trying to get the big move, the breakout move. So what I would do instead, wait till it break out the range either to the upside to the downside. But as you can see right here in this area, it broke up to the upside, passive resistance, boom, turn into support. Okay, when it turns support, it continued to the upside and hit another resistance, and then backs back down to support, back and forth. Then went back up to the resistance, but broke the resistance, came back down. And here I would not enter because you don't know for sure if it could be a fake breakout, which you would call a fake breakout, and so which means it's a possibility it could go back to the downside to the support or even past this support right here. Okay, so you do need your confirmations. You also need your entry bars as well. That's why strategy is very important. And the next slide we're going to talk about is identifying support and resistance. The key, hold on. Well, same thing. The key support and resistance. So as you can see, it ranging right here, right? And got a fake out that I was talking about when people you see that it broke past it just a tad bit. And if you would have entered here, it would have stopped you out and just shoot back up to resistance. It's and continue to range. When you want to see a breakout, especially a range breakout, you want to see a big drop typically when it comes to a breakout, when it comes to range breakout. Me personally, I would see the entry right here because based on my strategy, because I see this a lot where a big move to the upside, straight to the resistance, uh, then back down to the downside to support. It could not pass. It could not pass here. This couldn't pass this second engulf. It couldn't pass this engulf candle right here. So this would be a good entry right here. Have my stop loss right up here, and roll this all the way down. But not a lot of people are able to see it or able to use a strategy. So I suggest most people just wait for a breakout fully out of the range and wait for a pullback, touching the support and turning it into resistance. Okay, and then when it's returning resistance, you can see it goes back down and continue to go down. Sometimes it can test it, go back and test that support line. Uh, test that support line about twice, sometimes three times, and turn it to resistance. Okay. Um, as you can see on the left side, on the right side, we have a breakout. This is the resistance line. We have a breakout, and then a pull back to within that break resistance, which caused this fake breakout, as you can see right here. Then on the other side, the right side, you see there's a breakout past the resistance. And then you see the next candle cannot go down past that resistance at all. So which means that the resistance is turning. There's a lot of buyers coming in. As you can see, that's a long wick right here. So a lot of buyers coming in, buying this market up. So this how you know it's a legit breakout. Okay. Now, step two: entry and exit strategy. The sniper entry. Okay, then you want to so combining moving average EMA 9 and 20 with the price action, I like to use these indicators not for to enter the market, but more for a confirmation, if that makes sense. I like to use indicators for confirmation to let me know, okay, it's going down and it's still below the 9 EMA, or it's still down below the 9 EMA. Like, for example, right here, this is the 9 EMA, the 20 EMA. Okay, it's still below it, so it's a possibility continue to go down unless the 9 EMA cross the 20 EMA. So then that's most, and with a strong candle to the upside, which means that okay, it could be a reversal, a trend line break. Right here was what you would call a trend line break. Go to the upside. uh I see typically most of the time when they do a trend line break, it doesn't go as much up uh as it was going when it was trending down. So most likely it would go back down. Okay. Uh Same thing here. It was staying above the see, you got the it was below the 9 EMA, but it was not much volume in these candles to going to the downside. Okay, so we got the crossing that 9 EMA, crossing the 20 EMA, bringing it up right here, confirmation right here. See, these would I would use the crossing to look for entry. It makes it a lot easier to enter, and but also we use the 9 EMA, wait for a pullback, let it test the 9 EMA for to look for entry as well. But like I said, look for an entry, not to enter, but look for an entry like it's a good confirmation. And as you can see, go straight down after it crossed. Had a nice little pullback, touched that 9 EMA, then continue to the downside. Same here. Over here, raise it a little bit. 9 EMA crossover. The 20 EMA going straight up. Pull back to the 9 EMA and went back up. Same thing, pull back to the 9 EMA and going back up. Okay, so if you see something like, typically, if the market already moving, please wait for a pullback. And that's why I like to wait for a pullback and look and use that 9 and 20 EMA for my confirmation to wait to that is a good time to look for an entry. Okay, keyword, look for an entry. Now we go over to the candle confirmation. So these what I use to enter, which is the engulf candle. You can use the pin bar and etc. But I like to use the engulf bar. Okay, so for example, the bullish engulf bar, as you can see, it does not close above the previous candle before this candle wick. It does not close above it, which means it's pretty weak. I mean, yeah, it's pretty weak. I wouldn't enter because there's a possibility that it could continue to the downside. And what it's doing actually, some people leave that stop loss right here, and what it does is stop a lot of people out and close their stop loss, or picking up people who enter the market waiting to enter the market and then set a limit buy. So also the wick could come up back up here and pick it up and just don't close and just stay right here and then continue to the downside. But right here it closed right above it, so which means this is an engulf bar. So it is not it closed. This is the close. This is the wick. This is your wick. This is your body of your candle. If your body of candle closed above the previous two candle wick high, then it's a good time to enter. That's an engulf bar. Bullish, as you can see right here. Another good example, bullish engulf bar. So it closed this this body closed right above this wick, and it's a good time to enter. A lot of times, some people will wait and see if wait for the next candle to enter actually, and wanted to close above this and this as well. Okay, so but then you have the bearish engulf bar where it drops down the body and it closes right below this previous candle right here, which is a good way of entering, good time of entering. Okay, and it's a big volume within that candle as well. And then we go to the next one. You want to understand your risk to reward ratio. Okay, we're gonna talk about the minimum of 1/3 ratio setup. Okay, I like to trade and look for 1 to 3. Some people do 1 to 2 because it's a lot easier. Excuse me. Some people do 1 to 1. It's a lot easier. And what I mean by 1 to 3, for example, let's say you do 1 to 1. You're risking $100 to gain $100. You doing 1 to 2, you risking $100 to gain $200. 1 to 3, you risking $100 to gain $300, and so on. Okay, you got step one. When it comes to this, step your step one, your stop loss and profit target. So you want to set up your stop loss and profit target. And use that to calculate it. Calculate your risk and reward. Okay, and then you want to plan your trades and trade the plan. Okay, so step 3, plan your trade and trade your plan. Okay, so you want to know before you enter the market, you want to know your risk and you want to know your reward. Okay, you don't want to just enter the market without knowing your risk, without knowing your reward, because that's very, very important. Okay, and as you can see, we got the percentage skills. So let's say you risking 50 for 100 for one, it's a 98% chance of winning. And then goes lower and lower. More you go, more it flips. Okay, more you have less risk and more rewards. The percent of chance of winning lowers. Okay, so which means less chance of you winning. Which is not bad. As long as you follow your strategy, it's good. Okay, that's why it's very important to have rules to set in place and have a plan before you make a trade. Okay, so if I typically go for 1 to 3, that's a 25% chance of winning. Okay, 1 to 2 typically is a 33 chance of winning. 1 to 1, 50% chance of winning. See, you could win and be profitable even at 33% chance, 25% chance of winning. Very low chances. I typically see that people with using have low percentage win ratio typically actually are more consistent and actually make money than the people who have higher chance higher win ratio. Okay, and the reason why, they're risking a lot for a small reward, as you can see right here. Okay, so let's go to the next slide. Risk reward ratio 1 to 3 setup. So like I said, trade your plan, not your emotion. A lot of people when they enter the trade, they enter the trade based off their emotion. They feel like it's gonna go up, they feel like it's gonna go down. Not knowing what's their plan. They might have a strategy, but like how they enter the market, but not a full. I wouldn't call it a full strategy because they don't have a really a plan. What would happen if the market go against them? What are they risking just in case their market's going against them? And if they set a stop loss, what is their profit target? Okay, because people just want to partner more and make money. But instead, you should look for a profit target. Okay, this is my profit target. So a lot of times, people look for like support resistance for their support profit target or supply and demand. Okay, as you can see right here, we're risking 120 pips. If you're risking 20 pips for mm, 20, 40, 60, 80 pips. Okay, take profit. Boom. That's actually a 1 to 4 ratio. Okay, which is really good, pretty good. But if you follow your strategy, you can do that. Okay. Test your strategy out too as well. Hold on. Went too far. Went too far. Went too far. I must have deleted. I don't know what happened. Nope, nope, it's over here. Okay. So as you can see here, let's say you got a trading capital of 500. You risk $5 to get 2.5. Okay. You risk 1%, or you can risk 0.5% risk. Okay, so let's say you risk 1% of 500. That's $5. 1% of 2,000. That's $20. 50,000, 500, 100K is 1,000. Unless you're using 0.5% risk. Okay. Uh, and this is your trading capital. So what you're doing, you're risking your trading capital. Uh, and this is like per trade. It's not like you risking this stuff for the whole trade or whole day. This is per trade. Okay. Now risk management and stop loss placement, which is very important by the way. Now I would say never risk more than 5 to 8% per trade, which I only risk 5 to 8% per trade. Uh, Risking it as a percentage of the capital. Let's say you're a conservative trader, person who don't like to risk a lot. Um, Everybody got their own personality. I think you should trade off your personality. You trade off somebody else's personality. This what makes you not have consistent wins. Also makes you have doubt in yourself, because you having doubt because your soul knows that you are not trading based off you, your spirit, and based off your personality. You actually trading based off somebody else's. So realize what type of person are you. Are you a conservative trader, a moderate trader, or aggressive trader? Me personally, I'm an aggressive trader, but I got a very strong boundaries, very strong rule to protect my capital. Not only that, uh, I'm perfecting my strategy where I can look for a weight, be patient, look for a really good entry where I'm risking very small for a big gain. Okay, and this is my personality. It's aggressive. It took me a while to figure it out. I was trying to I was trying to be conservative, be a conservative trader, risking not much per trade, but at the same time, I was entering using aggressive strategy, so it wasn't matching up well, especially with my personality, and it took me a while to figure that out. Okay, so let's say you had $10,000 in your account, you risking 2%, 3 to 1 or 3 to 1 reward to risk ratio. Okay, all right, let's say you lose one trade, 3 trades in a row, 4 trades, 5 trades in a row, and you're on a risk in 2%. You're not losing that much, as you can see. You losing 200 every time, just about. And then once you finally win, you know, let's say you risking 200, so you see loss, loss, loss. So you got 480, 46, not wait 998, wait 9800, 9600, 9400, 9200, and 900, right? And then you finally win. That will boost you back up to 9, because you looking for a 3 to 1 to 3 ratio. That boosts you back up to $9,500. Okay, so that's basically right up here, boost you back up to like the third loss. Okay, close to the second loss. You lose again, lose another 200. You down again. You down back to 9,300. Okay, then you win again. Then you back up to 9,900. Okay, then you win again. Then you back up to 10,500. Then you lose 2%. Okay, so what you're doing, you lose 2% to look for a win. So as you when I'm showing you here, you could lose a lot and we just win a couple times. See, we on the right here, we won 3 times out of 10, which means we lost 7 times. 7 times. And we still profitable. Okay, we up by 3.33%. Where this is a bad trade. If you risking a lot, let's say you had, and we talking about capital rise, okay? So let's say you risking. This is why you wouldn't know what you risking, okay? So let's say you have 10,000 in your account. You risking 20%, and we do it again, okay? You risking 20%. You down 800, 8,000, 6,400, 5,100, 4,000. Then you 3,000. Okay. Then you win 60%. You up 5,200. You lose again. Back down to 4,100. You win 6,000. Win again 10,000. You lose 8,589. Okay. And this is why you should know your risk. And knowing how much you're risking is very important. You don't want to risk more. You don't want to risk a lot. Okay. So this is why a lot of people like to be a lot of people that's conservative traders are a better chance being consistent than the aggressive trader. Okay. And I understand that. That's why I perfected my strategy. Worked on my strategy, back tested my strategy so I can have more wins than usual, which is worked pretty well for me. Okay, it works pretty well, but it doesn't work well for a lot of people. It does not. Okay, so understand your risk, understand your rewards, understand how much you're risking, uh, understand your ratio, all that included um, to keep your capital, if that makes sense. Okay, then the ATR, average true range, to set a stop loss. Okay, boom, 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 boom. As you can see, there's a bearish flag breakout to the downside. You enter here, set your stop loss above the flag. Okay, once it goes down, boom, says you move your stop loss down. Because if it goes past here, you out the market and you take some profit. But if it doesn't, it continue to go down. Set your stop loss again, right? I would set it right here, but right here it shows you set it right here. And the reason why, because you're using this ATR true range right here to where it sets the stop loss. Me personally, I don't use that indicator. I use actually market structure to know where to set my stop loss. I feel more comfortable that way doing so. So that's why I say if it was me, I would set my stop loss more right here. But I can see why right here is a good one. But a lot of times it can stop you out way too soon, knowing that most people are using this indicator. So it's best for me to go off the market structure, So then set my stop loss, continue, boom, and see somebody else set their stop loss here, boom, cut them out. They took profit, but if I would, like I say, I would have set my stop loss either here or here, which is a good spot, that's where they left it. But if I would set my stop loss here, I could go up here and took less profit. If I would have set my stop loss here, But me being an aggressive trader, I would have set it here because I know I make good amount, but looking for more of a to the downside. I'm gonna set it here, so just in case it fake it and just continue to go down. You see, and as you can see, the indicator right here, showing where to buy, when to sell, based off the strong candle to the upside, busting past the indicator. Same thing here, strong candle to the downside, busting past this indicator. And now you can use these boxes for risk. The red part is risk, the green part is reward. Okay, you enter, boom, gain your reward. Wait for a pullback, do the same thing, keep going, so on, so on. That's why quality trade is very important. Where you enter the market and trade, you race to reward, take your profit, wait for another entry to get in. Let's say I miss it here. I will wait for a pullback to here, which it did right here. And all right, we'll wait for a pullback here. Set my stop loss right here, and it will not be stopped out. Continue to the upside. And we'll pull for target and take it. And then we go to the next slide. And we're talking about scaling in and out the position. Okay. So I like to scale in my position with one contract, sometimes two. So let's say this is ranging, bust out the range, come here, come back and test the support, resistant, and turn out to continue to the upside. So turn that resistant into support, enter, set my stop loss around this area. Wait till it hit this, like up here, hit this, boom. Wait for a pullback. Now enter one more or a couple more and set my stop loss right here a little higher. Okay, so I'll be in the money and then continue to the upside. Boom. Now I got some, you can scale out of here. Once it start reversing, scale out, wait for a pullback. If it hits your stop loss, you out. If it doesn't, okay, cool. You see an opportunity to get back in, scale some more back in, and continue to the upside, okay? So scaling in and scaling out is very important to keep your capital. If you need a better understanding, just leave a comment. If I didn't explain that well enough, leave a comment below. I could come back to this specifically with his own video talking about how to scale in and scale out. I could also do a live trade to show you as well how I would scale in and scale out a trade. But typically I don't scale out. I'll do more scaling in and take my full profit, if that makes sense, okay? But some people like to scale out. The next step is trading psychology and execution, which is very important. It's 90% more important than just the strategy itself. Some people believe this is 70%. Me being into metaphysical, master of the mind, an alchemist, a mentalist, whatever you want to call it. I believe everything comes within, then without. Okay, everything started with atomic level before it goes higher. Okay, into the physical level. Okay, what you want to do is stick to your plan. Avoid emotional trading. Very important. So let's say number one, nope, no trading plan. Okay, and this is why people fail. It's because no trading plan, risking too much on one trade, which I talked about earlier, knowing your risk, not having a trading plan. Number three is giving into your emotion. And what I mean by that, let's say you trading, you lose a trade, so you want to hop in right away rather than look for another good entry to enter. You just chasing the money, trying to get your money back, which is not good, which cause you to overtrade, which is not good. And this is why I set a boundary and rule, I suggest you to do it as well. So let's say if I lose 2 trades, not let's say when I lose 2 trades in a day, I'm done for that day. It doesn't have to be 2 trades in a row. It can be I lose a trade, win a couple, and lose again. I'm done. Okay. This helped me stay in the market. Also helped me keep my capital as well. Help me actually not go off my emotion, so I can trade better the next day. Knowing that I did a good job, feel more confident stepping in the next day. Know I did a good job training my plan, rather than train off my emotion. Because typically I notice when I overtrade, sometimes I could win, but most of the time, I wish I never did. If that makes sense. So it's best to have rules and boundaries set up around your trading plan and strategy, so you don't lose your capital. Okay, and this is very important, very important, very important. Which a lot of people don't have is no patience. So they enter it once they, let's say they lose a trade, they hop in again real fast, and because they're not patient, and it was cause them to trade off their emotion, not trade off their plan, cause them to overtrade, cause them to FOMO, cause them to do all these other bad habits. And since they're doing these bad habits, and what you're doing, you're programming your mind, which is very important. When you keep doing bad habits, you programming your mind to continue to do these bad habits. And if you guys are doing bad habits currently, and you feeling you're not being consistent, and the reason most likely you not being consistent because you keep trading the same pattern of trading off bad habits. I suggest you realize what type of trader you want to be. What's this character you want to be? How does he trade? How does he move? Visualize yourself being a professional trader and do it. Do that. It might take a while to get over that emotion or want to hop back into missing out, fear of missing out, FOMO, over trading. It might take you a while, but if you continue to do this and be consistent, what are you doing is you reprogramming your subconscious mind that you to follow your trade, to follow your plan, your trade no matter what. And what that would do, that emotion would turn to confident, and be a lot better. That okay, I feel confident. I know, okay, I lost twice. I'm not gonna hop back in FOMO. I'm gonna be patient. I lost once. I lost the trade. I'll be patient. Look for entry again to re-enter before I enter, because I don't want to FOMO, even though I see it stop me out and continue to go down to the downside. Okay. And then number 6, taking profits too early. Which I was saying earlier, you set your stop loss the wrong way. You can take a profit too early. You set your profit target too early, and not you can actually take profit too early. Okay. Number 7, letting losing position ride too long. A lot of time, people that does that is because they don't have a risk plan, a risk management plan. You gotta know your risk when it comes to trading. You gotta know what you risking. Okay, so when you risking, like I say, what I do, I risk $100. So you should be 150. Now it's $100. I'm risking $100. I know my risk. I'm done. I'm not moving my risk unless I move my risk when I'm in the money. Then I move my risk down to based off the structure where I feel comfortable to set my stop loss, knowing that if it passed there, I'm done with the trade. Okay, and you want to continue moving your risk to you're in the profit, and continue after that as well to collect more profit. And a lot of times, people, like I said, they set their stop loss way too early or way too close, and they will leave that market, leave some money on the table, and not taking profit. Much profit they would if they would have said it different. Okay. Number 8. I'm sorry. Trading strategy too complicated. Okay. The reason why your trading strategy is too complicated is because it's not your trading strategy. You're probably trading off somebody's strategies they give you. Where they're figuring out what works best for you is and building a strategy based off that and back testing it. Back test your strategy and see if it works. Okay. Number 9, not strong trading plan. You don't have a strong trading plan. You don't have entry. You don't have exit. You didn't see the you didn't look in the 1 hour to see which way it's trending, or if it's trending up, if it's going to hit a double top or hitting resistance, turning the head and shoulders. You don't know your profit. You don't know your win and reward ratio. Okay. Okay. And number 10, not having a trading journal. Very important. How else are you gonna get better when it comes to trading when you don't journal your trades? Okay. And I'm not meaning trades, any random trades you trade for the day, but every single trade you do. And when you do this, it actually forces you to be patient, wait for an entry, and be more precise. Having quality trades, not quantity. Okay. Now sticking to your plan to avoid emotion. This is an emotion and graph where a lot of people go through, whereas optimism, thrill, informa, and then as complacent, anxiety, uh, denial, panic, boom, boom, boom. And these are people that think it's gonna go up, got in, luckily without a plan, boom. Part staying alone, things gonna continue to go up, boom, boom. It's falling. They feel confident, they feel having anxiety, being delusional, and then boom, it can't get back up there now. It's too late. You can't get your money back. Okay. Now, the effect of a bad mindset is little to no emotional control. This is what I talked about earlier. In order to have emotional control, you just got to change your behavior and your patterns, what you do on a daily basis, or change your habits. Okay, and change it to the person you want to become. And this will help you control your emotion a lot better. And anger trading, which is which cause over trading, or I'm going fear of missing out, or it stop you out, which you want to get back in with quick instead of assessing the market and see is it the right time to get in, or is it a good entry. Okay, leads into impulsive trading, like I said, FOMO, stuff like that, fear of missing out. That leads into impulse trading without a plan. Okay, uh, failure to follow rules. So this is one of the worst bad habits, I would say, when you fail to follow your rules. Because I typically, when I used to follow my rules, I get very upset with myself, which caused this to little to no emotional control, and which made me continue to do the same thing over and over, which I know is uh bad. You might know it's bad that's what you're doing, but you can't help it because you are your emotion. You react to your emotion. Let's just say that you react to your emotion. Your emotion don't react to you. So in order to change the what you're doing, you got to change your emotion to things. Okay, and the best way to do that is change your habit and change your pattern. So yeah, bad analysis. Now looking at the 1 hour time frame for the trend, if it's going to hit a support or resistance. Now looking at the 15 minute time frame or whatever you like to use, you see what pattern you trading, stuff like that. And then not only that, doubting your own skills. Okay, the reason why people doubt their own skills is because they don't have a plan, they don't have a strategy, so they're not very confident, and they keep doing bad habits too, or they keep doing bad habits, doing the same bad habits over and over, which means you might have skill, but because you're doing these bad habits, it's affecting your trade, which cause doubt, which is more emotion, negative emotion you do not want when it comes to trading. So this is very important. What should you do? What should you What should your trading plan consist of? Trading goals, maintain a trading journal, trading platform and tools, knowing which one you want to trade. Your market, know your market, your instruments, and your time frame. When I say instruments, your indicators, your time frames, your trading strategy, setups and entries. So you want to know your trading strategy. What's the setup like? What pattern you're gonna use? Support or resistance or a pullback. And your entry, but when you go in, how you gonna enter? Some people use indicators. I like to use candles. So is it an engulf bar? Is it a doji candle? Okay. Risk and money management is very important. So know what you're risking. Manage your money. Okay, that's the reason why you should be a trader, is to learn how to manage. And daily prepare market routine. Okay, so you want to have a book on your side and write down, okay, this what the have the book on your side. Open the computer, and when the market open, you can see what you want to trade based off the news, fundamental, and then you can look at a technical analysis and see, okay, what's the market doing? Is it uptrending, downtrending? Is it ranging? What are you looking for to enter? Okay, what's the key levels and such and such? Okay, and then you gotta know your trading style. Okay, know your trading style. Is it scalping? Is it day trading? Is it swing trading? Or is it position trading? Okay, this is very important. Okay, so five five steps to help you develop your trading plan. Define your trading goals. What is your trading goals? What are you What are you looking for? Determine your risk tolerance. So knowing, see, my trading goal is to, the reason why I'm going to be a trader is because to be able to control my mental and my emotion, become the master of my mind. To be honest with you, um, determine your risk tolerance. Determine what I'm risking based on my account. Phew, $100, which is what I'm risking. I feel comfortable with per trade. I want to lose 2 trades and I'm done for the day. Those are very important when it comes to risking. Your risk. Choose your trading strategy. Choosing your trading strategy. Basic, build your strategy. Don't choose it. Don't pick it up from anybody else. Build your strategy. What's worked for you, and it will come. It will come over time. Back test it over and over, over and over. You can get some ideas from one person. Don't try to learn from multiple people, because then you pick up a bunch of different ideas, put in your mind, which cause confusion. Okay, maybe listen to 1 to 2 people if they resonate with you, of course, and figure out what type of strategy out of that you would like to use. Set your entry and exit points. So like, you want to set your entry. What are you thinking about? What you looking forward to enter, and what you looking for to take your profit. Monitor your performance. So maybe at the end of the day, actually, you should do this every day. At the end of every day you trade, check out the performance. Not only every day you trade, but every week. Look at weekly basis, how your performance is for the weekly basis, and then what your performance is for the monthly basis, then the yearly basis, and such and such. Okay, almost done here. Now you want to understand the probability in dealing with losses. Okay, let's talk about this, diagnosing the bad losses. Okay, you got the algorithmic, okay, step by step list of technical reasons why your stop loss wasn't taken, and setting up profit. Okay, reviewing of the trades. Okay, now you got an emotional, setting up a list of emotional reason why you stray away from your trading plan and why you didn't have one. Okay, one side is based off your technical, which is your strategy, which is 10%. Some people would say maybe 30%, but let's go with 10%. Then you got the emotional side, which is 90%. So you want to, that's very important. So you want to journal your emotion and the technical side, and see what you did wrong and what you did right, okay? And then whatever you think you need to tweak it and work on that on a daily basis until you get it down pat, okay? Now the technical side will be your stop loss settings. You using the wrong indicators, uh, and you didn't back test and wrong allocation. Okay. Now on emotional side, fear of missing out, complacency, panic, and revenge trading. Okay, these are some reasons some things you could write down in your journal if you did those. Okay, if you what was your stop loss settings? Was you fearing that you was missing out such and such? Okay. Now we're gonna talk about losses. Me personally, I tell uh people this: there's no such thing as losing. We love our L's. We love our L's. Without L's, we never have W's. L's are very important. I love my L's. Okay, we gotta think at. We gotta think at. We gotta think as is this. We gotta think as this is yin and yang balance. Okay, so there's no such thing unless L's losing losses. L's for learning. Okay, we love our L's because we love to learn. We love to learn, tweak it, analyze it, and perfect it. Okay. The dumb losses, unformed errors will be adding to your loser, breaking your rules, which is typically what most people have. Actually, most people don't have rules. Taking too much risk, widening your stop loss. So let's say you see the market's pulling back too close to your stop loss, you want to push your stop loss way back. Or I catch myself doing that in the past a lot of times, and that's why I was losing when I was like, why didn't I just let it sit there and just let it take that loss, right? But didn't do it, kept widening it, such and such. That's why you don't want to keep whatever you set your stop loss, keep it there unless you want to move it close to your profit target, okay? Then moving the stop to break even too soon. So a lot of people move the stop to break even way too soon because fear of losing a profit could be one. And then we got the good losses. You follow your rules, setting up a stop loss, sizing correctly, scaling in and scaling out, taking the loss. So you take the loss instead of widening your stop loss, trying to push it back so it won't hit your stop loss. You take the loss and then moving on. You're moving on. Like what I mean by that, you don't hold grudges and emotion on the losses you took. You move on and you learn from it and you realize, and typically it's not your fault. It's your part of your plan. And that's what I said in this game of trading. There's no such thing as loss, only learning lessons. So that's why you're going to lose. As long as you know, like I said earlier, you lose. It depends on your risking. If you're risking 2%, you could lose 7 out of 10 and still be profitable. Okay. Now we got journaling your trades was very important. Don't just journal here like you see here, just words, the ticker and everything. Get it more detail, the candles and stuff like that. But that's even a little harder when you're just drawing candles and it takes too much work. Instead, I will use what I'd use is Evernote. Screenshots. You can be able to take notes. You could draw in there. You can save it in different files. You can separate it by days, weeks, months of your trades. And then now to that, you can type in like keywords so you can go back and take a look at your strategy and see okay, like stop loss, why I keep losing, why I keep hitting my stop loss. Type in stop loss, you see, okay, all your trades that reason why you got out is because of stop loss. Maybe you might need to tweak it a little bit and push your stop loss back a little bit. and learn the structure more. Okay. Number one, you want to play new trades, execute your trades. This is how you create a journal. Playing your new trades. So you want to write down your new trades. Write down how you going to execute your new trade. How you going to execute your execute. I'm sorry, execute your trades by entering the market, exiting the market. Um, record your trades. Record your trades by screenshotting it, and record your emotion as well by writing it down. What was you feeling at the time before you entered the trade? Doing the trade while you managing it. After the trade, okay. Review your trade is number 5. So you want to, at the end of the day, you want to go in your journal and review all the trades you take for that day, even by weekly, by monthly basis, and by yearly basis, and see what you be doing, the growth, what you need to work on, and such and such. Okay. The bonus tip is backtesting your strategy on a historical chart before trading live. So you don't need one of them simulators or them trading platforms where sometimes you got to pay for it, the back test, where you gotta go back and watch it go like this. You actually just go back to go back in the market, take a look at it, and see and see looking for your strategy in the historical part of the chart, and back test that at least 10 times and see how it works, and do a different season, like every quarter. See how it works on each quarter. See how it works on special events, earnings, and such like that. Okay. And let me show you how I will back test. I'm gonna show you how I would back test. Okay. So we're gonna get into it. Okay. We right here. Now we're gonna get into it. How I would back test it. Okay. As you can see, I already got my key level set up. This flag I have right here. So that's for me. I'm back testing breakout. But let's go back a little further. Let's see here. This is a trade I took earlier. Okay. You can't really see it here. Let's go in 5 minutes so I can show you, because I saw it in the 5 minutes. Okay. This is the trade I saw earlier today. This morning. Okay. And it stopped me out. But it stopped me out. I closed myself out because I reached my limit stop loss for the day, which is 300. If I lose 300, I'm done for the day, which I did. And then continue to the downside. Did I get upset with myself and disappointed? No. Why not? Because if I did get upset, get mad at myself for me missing out on a trade that I knew where it was going, and then I would continue to overtrade, trade off my emotion, uh, trade from fear of missing out. Okay, so what I had here was this. So I had this and this, right? It was forming a flag pattern. It's already busted out. I had my here, and I was looking to enter. See, now what I did, I tried to enter here, picked up some, took my profit, thinking I was cool to enter some more that was going to continue to the downside. But I entered and it stopped me out. Boom. With this long wick. Hit my stop. Boom. But if I would have stayed with just stay with it, like continue and wait for a pullback like it did here and test this, which that's why I have this here, which it did. Then it had an engulf bar. As you can see the engulf, it closed. What closed right here below this candle. So that's an engulf bar. And so breakout, flag breakout, pull back to this resistant. Support, turn into resistant. This resistant area. And then continue to the downside. And boom. And hit my key levels. This is my key levels from yesterday. Hit my key levels. Boom. I could be upset that it stopped me out right up here and be mad about it. Okay. But instead, I'm not. Okay. So it is what it is. It happens. So it continued to the downside, hit my key levels, bounced on my key level, came back up here. Now it's ranging back in a tight squeeze. As you can see, it finally breaks out. I would say this is a trend line break. Okay. If it was me, personally, this is what I would do. This is a trend line break. But this is not my time to trade, so I'm not trading, but I'm going to show you what I would do. So it's a trend line break. I don't want I would have this here and this here. Boom. And have that right there. Okay. I will have this below this wick. But typically, probably want it here is what you really want it, to be honest with you. If you want me to be honest with you, the previous low right here. Right? Because it's a possibility, yes, boom, boom, breakout. It can come back and test this. All right. But since it broke out this flag pattern, I don't want it to come back in here. Otherwise, it would be a fake breakout there. And then that means it's going to go down to the downside. And I don't want to risk that much right here, knowing that I don't want it to come back in this area. So I will wait, even though it's busting to the upside. But as you can see, it's above the 9 EMA. Strong green volume candle here. I use the RSI for confirmation. I wouldn't enter yet because it did not test it. It didn't test the 70 RSA. So I will wait to touch it to get more confirmation. But as you can see, it got an engulf, but it haven't closed yet. So I will wait and see. Because the possibility it still could be a fake out. Okay? Still a possibility. But that's how I would do it. That's my trend line break strategy. Or this is a breakout strategy. Really, I would say it's a breakout strategy. To be honest with you, I would call it the breakout strategy, but either or. Either or. Let's just say that. So it depends how you look at it. If it's 15-minute time frame, it's the breakout. Okay. And then same things here. See how I did it right here? Broke to the downside. Have my candle set. Boom. Wrote it down here. Wasn't too much. Couldn't gain too much off that. Okay. Let's go over here. Same thing here. I did it. See, as you can see, as I'm going back, same strategy every time. Flag, breakout, wait for a pullback, hit a pullback, enter. As you can see, it did not pass it, and then continue to the downside. Boom, boom, boom. Collect all of that, and then close out for the day. Okay. Now you can easily get back in, and this is why it's good to have multiple strategy. You got the breakout strategy. I like to use. I love the range breakout, but all the breakout. I use any breakout strategy. Let's get rid of this. Come on. It's right there. Okay. So this right here would be the trend line breakout strategy. Breaks out. to the up to the ups, breaks out to the upside. Okay, wait for a pullback from here to here, which it did. Had a nice little pullback. Okay, did not engulf yet, but a nice little pullback. So I went into here. Then probably have my stop loss along. Let's go to 5 minutes. Let's see. Go back over here. Here we go. Here we go. That's why I use the 5 minutes for entry. For this reason, because you can get a better looking at when it comes to entry. So I was at the 15 minutes. I look for the pattern in the 15. Look for the entry in the 5 minute time frame. It's an engulf. See, as an engulf. Boom. I would enter here. Have my stop loss right here, but right here. Enter once it close and ride this boy up, and then set my profit target. Scale my stop loss up. I'm gonna scale my stop loss all the way right here. Boom. It would have stopped me out. No, took my profit, done for the day. Okay. Or you just use the top of the wick if you want to be more safe. Boom. If you go back there past that wick. Boom. You out for the day. But me, typically I do it right here. Give it an opportunity to have a nice little pullback to re-enter. But as you can see, it touched the 20 EMA. Bounced off the 20 EMA, went back up. Now, right now, what it's doing is ranging. Right? So what you looking for? Like I say, range breakout. Boom. Boom. As you can see, I'm gonna have it on top of this actually. Boom. Yeah, right here. It's ranging. A fake breakout to the downside, like I talked about earlier. It's a fake breakout. Strong volume candle coming in. And EMA crossing, as I told you earlier. The EMA, 9 EMA crossed the 20 EMA with a strong volume candle. Also, the RSI confirm it with a touching the 70 RSI. Enter the market. Look to enter and get some profit. See, but I might get a what? Maybe a if I'm into here, risking here, that's about 1 to 3 risk to reward ratio right there. Okay, so pretty good. So yep, and then go back here. Same thing here. As you can see, I already showed that. Go up here. Up here. I don't know why that was there. I don't know why it was there. Can't remember. But let's say you got this. Okay, come on. You got a little flag pattern right here. Okay. Broke that flag pattern to the downside. You look for an entry. Here. And sometimes it might not hit what you set your stuff up. So it might not hit it. But that's why I look at the 9 EMA. Since it touched the 20 EMA with an enter here, set my stop loss up here above this box right here. And wait, and that's a small risk for a big reward.